Hello and welcome to the look ahead for Tuesday, the 15th of July with me, Fiona Cincotta, Senior Market Analyst at City Index. So just to kick off tomorrow, we'll have German ZEW economic sentiment. Also tomorrow, later in the day, we've got UK Bank of England's Andrew Bailey speaking. We've got Canadian CPI as well as US CPI. And then we also have earnings from US banks. JP Morgan, Wells Fargo Group and Citigroup kicking off Q2 earnings season. So just kicking off with the US CPI data. Expectations are for inflation in the US to tick higher to 2.7%, up from 2.4% year on year. Core inflation is also expected to rise to 3%, up from 2.8%. Now, this is a rise in inflation. It's still relatively close to the Federal Reserve's 2% target, so it's not probably going to be enough of an increase to make the Federal Reserve nervous. We've heard many times from Federal Reserve Chair Jerome Powell, who said that he does see inflation increasing over the summer months, which is why the Federal Reserve have said that they're looking to really wait and see as far as interest rate cuts are concerned until the other side of the summer. The market at the moment is pricing in around 50 basis point rate cut still before the end of the year. That's in line with what the Fed minutes showed us last week. And as well as that, I think it's also worth keeping in mind that although we've had a lot of trade tariff talk from Trump, the market isn't really reacting in the same way. So we've actually seen the US dollar pick up. That very much sell America trade has gone. Now, these trade tariffs are expected to increase inflation, but there is the sense that there may just be more of a hump in inflation before it comes back down, rather than sort of a long-term hit to inflation, which again may be just helping those views for the market. Now, just pulled up here sterling US dollar chart because it's quite interesting. So we've got inflation in the US picking up, and we've got the potential that the Federal Reserve are going to keep interest rates a little bit higher for longer, looking at a September rate cut, maybe still 2 this year. And then we look at the UK. Now, the position in the UK has deteriorated quite quickly. So on Friday, we saw that the UK GDP contracted by 0.1%. That was unexpected. Second straight month of contraction. Over the weekend, we heard Andrew Bailey, Bank of England governor, warn that if we see a marked slowdown in the UK jobs data and jobs market, then the central bank will be forced to cut interest rates more aggressively. Now, Andrew Bailey is speaking again tomorrow. So the market's going to be watching very closely what he says, particularly given that we have UK inflation data and jobs data on Wednesday and Thursday this week. And all this comes at a time where the government is struggling with public finances. There's sort of circulating expectations that the Labour government may be hiking interest rates or forced to do so at the autumn budget in order to plug a black hole that's being created from this lack of growth and this U-turn from welfare spending. So here we've got sterling US dollar. Sterling has been coming under quite a lot of pressure because actually maybe we're going to be looking at a more dovish stance from the Bank of England going forward. And especially if we see tax hikes coming in, that also tends to have a deflationary impact, slowing growth further in an economy which is already with slow growth. Not a great outlook. We're testing this really key support here, 134.50. Okay, so we've risen up to that all-time, that 3.5-year high of 137.90. And we have fallen down. The pound has been under quite a lot of pressure so far at the start of this half. We're down at that 134.50 level. That's sort of the high that we saw back in April. It's a level which has been quite important across the past few months. Now, if we get a breakdown below this level, we've taken out the 50 SMA already. Let's see there. Then I think sort of the 133.75 is a level to be watching before we head back down really towards that 134. 32 level as well. So there are a lot of levels to be watching on the downside, but if we do break down that support, I think that's going to be quite important. On the upside, we've got this support level here, the resistance level here, which is at the 136. That's the 20 SMA. So we've got to rise above that, then the picture could start to look a bit more positive for sterling US dollar. Also, just going to take a quick look at euro US dollar. Obviously, we've had Trump threatening those 30% trade tariffs on the EU if there isn't a deal before the 1st of August. As I said, not seeing massive market reactions here. We've certainly not seen much of a US dollar weakness story on the back of it. That does seem to have sort of really played out. In fact, it does look that we may be seeing some dollar recovery now. And I think, you know, at the end of the day, if America does actually get some better trade concessions from these tactics that Trump appears to be employing, then that could be good news for the economy, which would mean supporting the US dollar. So same with the euro US dollar. It rose to that 4-year high of 118.30. We've been on a sort of downward trend since. It is still within that rising channel, but we're just testing the lower bounds of that, which is also the 20 SMA at the 116.75. A break below that's going to bring 116 into focus. So we've also got German ZEW economic sentiment going to be watched closely amid optimism that there is some revival in economic sentiment in the Eurozone's largest economy. So that's what we're going to be watching out as far as the euro US dollar is concerned. If we do find that support holds, then on the upside, looking at 118, if we can get above that, that would create, again, sort of a higher high towards that 119 level. And then just finally, we have the start of US earnings season. Comes around very quickly. We're there again. And we've got US banks kicking this off. We've got JP Morgan, Wells Fargo Group, and Citigroup all due to report. Now, as far as what we're going to be looking for here, I mean, if we think about what's happened as far as volatility in the share price, I mean, look at this. This is where Q2 basically started, and this is where it pretty much ended. So we've got, you know, this massive recovery in the markets, which would have been really good for the trading desks. We've got bank share prices trading just near their record highs, but there's also going to be a lot of attention on the guidance because of this economic uncertainty that we're facing because of Trump's trade tariffs. Now, just as far as levels is concerned on the S&P 500, we're just down from the record high there with 62.90. That's what buyers are going to be looking to rise above in order to get to 6,300 and fresh all-time highs. Just seen this consolidation is helping to bring the RSI out of overbought territory. Just on the downside, looking at 6,200 on the near-term sort of round number, and then 6,130. That was the high that we saw back in February of this year. You know, not really negating the near-term uptrend unless we get a fall to around the 6,050 level. We'd need to take below the 59.20 to create a serious lower low on the longer term picture. So that is everything from me for today. I hope you've enjoyed Talk for Watch, and if you have, please do give the video a like, and please do subscribe for more videos like this.